So Simon, where in the world are you today?
Today I'm in Monaco, enjoying
Okay.
a beautiful sunny day, about 30 degrees, and just hanging out with my dog, of all things.
Okay. All right. Well, listen, Simon, this is a real treat to have you on. Just as a little context for the listeners, if you haven't read my book, I think Simon's mentioned a couple dozen times in the book, and so Simon, we had the privilege of working together. You were an early investor, one of the first investors in my company, and then probably one of the most critical investors and advisors to me over the years. And so maybe we just set the stage real quick for the listeners on. I'd love to hear your version of the story on how we met. So what's your recollection of kind of the first meeting that you had with me?
No, I'm probably going to get this totally wrong, but I think it was in New York or maybe I'm totally confused here, but I think it was in New York at the Inman conference back in 2007 or 8 or something. I don't even remember the year. I remember the decade, so that's a good start for me. But about 2007 or 8. I think it was the Inman conference, New York. Am I right?
You're right about the conference, wrong about the city. I remember because it was in San Francisco, because what happened is I had sent you a cold email, which I still a cold Facebook message, which to my surprise you actually responded to, because at that time I think I was spamming everyone on LinkedIn and Facebook trying to find an investor for my business. And you were the guy that actually returned the message. I think 1 out of 100. I think the key lesson for me was that I wrote you a more tailored message because I had followed a little bit more in your career. And so I somehow got your attention and you agreed to meet with me. And I think I told you, hey, I'm going to be at the Inman conference in San Francisco and I'd love to have coffee with you. Funny enough is that I wasn't going to be at the Inman conference, but since you responded, I bought a ticket to go so that we could meet. And just out of curiosity, do you remember what we talked about in the first meeting, or because I've actually told this story many times to other people. So the beginning of this podcast, usually these podcasts are me interviewing the other person, but I'm actually going to do a little more talking in this one and we'll get to the good stuff later with a little bit more of some advice and experience that you definitely taught me over the years. But I'll remind you, we met in a cafe. You sat and took notes diligently for about an hour. Before the meeting, I had memorized a bunch of statistics from Wikipedia about how large the LATAM real estate market was. You took very, very proficient notes the entire time. And at the end of the conversation, I proceeded to communicate, because you said, okay, so you're raising some money. How much money are you looking to raise, and what's the valuation? And I remember, terrified, I took this gigantic gulp, and I somehow mustered up the idea of asking you for $1 million at like a $7 million valuation during a time period where it was a massive economic crisis, worse than the one we may be in for right now, and real estate would happen to be at the center of that crisis. And so I'll tell you this because it was kind of funny. You looked at me, you looked back at your notepad, you looked at me again, and you said, "Yeah, I think probably this meeting has kind of come to an end." You said it in a relatively polite way, but it was very clear that I was blowing smoke up your ass with that ask. And the funny thing is that the next, you ended up kind of parting ways and you left. And like a very rookie mistake, I called you and left you a message and said, "How about $4 million?" So anyways, I just wanted to set the stage here and set the context. But, one thing I write about in my book is the importance of finding mentors and investors that can dig in and bring value in the early days. And you happen to have built a very similar business to Viva Real in Australia. called REA Group, which today is like a $12 billion market cap company. Where you were the CEO in the early days and you scaled it. Yep. And I reached out to you on this cold message. We met, and then it took me about 2 years to bring you on as a shareholder because I didn't really know what I was doing. So where do you draw the line from harassment and persistence when you're trying to bring on an early stage investor or advisor? What's your advice?
Well, first of all, those who are not persistent don't get the money. That's the first thing, right? Because if they're not persistent in chasing you for money or at least getting advice and guidance from you, then they're probably not going to be persistent when times get tough in their business. So it really comes down to the nature of the individual. So that's the first thing. Clearly, if someone says no, thank you, and no, thank you, and no, thank you, that goes from being persistent to stalking. Okay, and you might get an AVO or something taken out on you, right? So be a little careful on that one. But it really pays to be super persistent. Now, what's interesting is, and I've come across a bunch of folks over the years who fall into a similar category. And what's interesting is the approach they take is very similar. They hit you up with their business idea. They're really asking for an investment. But what they also do, and you did, was they're really getting as much advice and guidance from you. They want to tap into your knowledge you have around building businesses or the market or whatever the issue is. And then the ones I often I'll have long conversations. If I find the conversation interesting, I'll sit there for an hour or two. I had a guy fly out from England to meet with me recently. We had lunch, and 2.5 hours later, he said, "I've got to go," because he's got a flight to go back to England. And what was interesting is then he followed up, and he kept following up and kept following up. A not only to get me to invest, but B, just to keep the relationship going and to get advice and guidance that could help his business. So do it, right? The more persistent you are, the more that you follow up with the individual, and the clearer you are about what it's for, right? If it's just asking for money and consistently asking for money, then it's not going to work too well, because as an investor, and when you invest in early stage businesses, you also want to give your advice and guidance. And so then for me, it's all about forming a relationship. So I'm not going to invest on the first. It's like getting married on the first date. You don't do it. You've got to date someone for a while before you get engaged, before you get married. It's the same concept. The better you get to know the company and the individuals running the company, and the more confident you are in, they know what they're doing. They're going to actually put your money to good use. They're open to advice and guidance. It doesn't mean they have to take it, but at least they're listening, and putting it into their solution set. The more confidence I have, at least, in that I'm not wasting my money in the investment.
Yeah, I think there's the classic, ask for money and you'll get advice, and ask for advice and you may end up with some money. And I think that's really well illustrated by what you said. I was actually just meeting with a founder right now, and I was reflecting on getting the emotional buy-in for an investor. If you start kind of sharing some of your challenges and then they start contributing to the ideas, all of a sudden they have this intellectual interest and emotional buy-in, because they're kind of, at the end of the day, they would end up investing in what's partially their idea now, right? And so, obviously, it's very helpful to find someone that has knowledge that they can, add value to what you're doing. But it's just as important for the person that's investing to feel like they can also contribute something, because you want to have an impact in what you're investing in. Otherwise, you're just investing in stocks, right? And so, yes. I think go ahead. I'd like you to comment on that too. I know, actually. Yeah.
Yeah, I was going to say, actually, you raised a very interesting point. From my perspective, I'm getting hit up all the time by people who want money. Today I've had probably 4, I think, and it's just emails that come out of the blue, and it's like, people assume I've got time to read an email that's about this long, which I just don't. B, half the time it's on a topic that I have no knowledge of, med tech. What the hell, right? Been hit up on that one twice today. And then the third thing is there's no differentiation. Why am I going to respond What is that there's no call to action that differentiates themselves from anyone else. And what's interesting is those who have done their research, and you talked about doing research up front, I think is really important. When you're going to go talk to someone, the problem is if you're talking to 30 people, you have to do a fair bit of research. But get onto LinkedIn and find out their background and find out a bit about the companies they've worked for and find a bit about what impact those individuals have had on the company, so that you can then tailor your message, which is the other point that you mentioned earlier, so that you get the cut through. It's no different to marketing anything, right? You're just marketing yourself to an investor. Problem is, you tend to forget that investor, like a TV viewer, is watching 50 ads, right? I'm seeing, 10, 15, 20 different opportunities come across my desk. All of them, at least some are asking for like $20 million, and I'm just going, what? Right? No, by email, you want 20 million? Forget it. Right? And so it's all about crafting your pitch in a way that's going to interrupt my daily flow to make it go, yeah, I'm going to get in touch with this person. And it can be done through a couple of ways. One is come via someone I know. Right? It's always good to have someone I know say, hey, you should chat with these guys. It gets cut through. The second is tailor it so that it actually makes sense to me based on my background in the areas that I invest in and I have more expertise in. And the third is be realistic in what you're asking. Okay, if you're a startup and very new to the market and you're doing something that everyone else has tried to do and you're valuing yourself at 10 million, you want forget it, right? You're just yet another person who has dreams. Okay, versus you're trying to do something different. You've got a different way of approaching the problem. Your approach is very pragmatic, and what you're asking for, especially in today's economic environment where all the stocks are being sort of hit hard, is to be very realistic and reasonable in what you're trying to do.
I think it's a great point about doing your research. I'll do a quick. This is podcast confessions here today in this episode, but when you were running REA Group, I think you had a blog that was called My CEO Life. And I don't know if it was like, is that right? And,
yeah.
And I think it didn't actually have your identity connected to it initially. Is that correct? Or was that?
No, I didn't.
No. Okay. Then
I just wrote it anonymously it's sort of like going to the psychiatrist, right? Or the psychologist, right? I get to vent on the things that will give me the shit.
I think later it was, it became clear that it was your blog, but yeah. I remember reading every blog post and this is actually a good advice for anyone listening that's an entrepreneur, because I interview a lot of, top tier investors around the world in this podcast. And if you can spend an hour or 45 minutes listening to how that person communicates, how they think, this is going to serve you so much better, when you approach them, because you understand. And I remember I used to actually kind of study, this is going to seem a little bit on the creepy side now, but like how you communicated about different topics. And then when I approached you, I would try to frame things in ways that you would already communicate. And, that's not manipulative. It's just being effective in trying to deliver a message. And, so that's something that I think that founders should really do.
Yeah. Good marketing. At the end of the day, it's just good marketing, right? You want to get cut through to your target audience. And there's no use sitting down with me and spending an hour talking about something that I'm bored out my brain with. I'd rather you get to the point. And if the point is interesting, and then we can just talk more about it.
Yeah. I mean, just looking at your portfolio of investments you've made, there's a trend, right? There's industries, there's a stage that you participate in, and you can, just by spending 30 minutes doing a little bit of research about you, when the founder approaches you, the medtech founder is not going to even send you an email because they've spent the time to see that you have zero experience or interest in that topic. And so I think that doing your homework, we call that sharpening the axe at Latitud. So, if you got 6 hours to cut down a tree, you might as well spend the first 5 hours sharpening the axe. Otherwise, you're just going to be, slamming a stick against a trunk. So as part of your investment, we ended up, bringing you on, early days. We also, I remember giving you some additional shares to, as an advisor on top of your investment to consult with us. You actually committed to making 6 trips to Brazil, which was some of the best, investment that we made in you because you were very committed. And I remember sitting in our tiny, shitty conference room with you, and you would literally go up to the whiteboard and you would write, okay, sales, XYZ, industry marketing, consumer marketing, product development, pretty much everything about our business because you had run a very similar business to ours. And this became the Viva Real Bible for the following years, and you created a tremendous amount of value for us. So how should angel investors and investors in general think about value creation for the investments that they make?
I think the first thing is get off your backside and go visit the business. Because if you're as an angel investor, so I'm going to talk it from the investor side, then I'll talk it from the investee side. So from the investor side, if you're going to invest into something, let's say you're putting in 200, 300, 400,000, whatever it is, and you're an angel investor, it's probably a reasonable chunk of change. It's a reasonable ticket size. You don't want that to go to zero. And if I look back historically around, and I've got over the years done 40 probably investments. I think I don't really know how many. I would say, and a bunch of them, probably about 5, 6, 7, I've written off completely down to zero. And if I look back at why they failed, it's because either I wasn't really thinking clearly about the investment up front. It was a mismatch to my requirements, or I didn't get involved enough in the business. Now, clearly you can't be involved in 30 investments. It's just ridiculous, right? But what you can do is say, I'm going to go spend a day or 2 days face to face and have the conversation. Because when you're face to face, you're not distracted by the phone, by other calls, by my dog running around or whatever else is the distraction, right? You are literally in the zone, and all you're talking from breakfast meetings right through to boozy dinners is about the business. So I think from an investor perspective, get off your backside, go. If you're going to write a decent check, go invest the time. You'll get to not only see the CEO who's in action, but you'll get to see the team. And then you'll get a pretty good idea whether they are, worth investing or not. And I would actually do that prior to doing the investment, because you really want to understand. It's a bit of an insurance policy. From an investee perspective, if you've got someone writing a decent check and they're coming in as a strategic or investor, get them into your office so they are not distracted. It's the other side of the coin. When I'm in an office and I've got someone in Canada at the moment who's saying, Simon, can you come out for 2 days or 3 days? And I've gone, yeah, okay, I'm going to go out there for 2 or 3 days. And I know for those 2 or 3 days, I'm going to be doing nothing else except eating and breathing this guy's business and getting involved with him and his team and giving them my perspective. Now, I've got a perspective. I might be right, I might be wrong. There's always these market conditions or market nuances, but at least I'll give a perspective on what someone is doing and really try to help them prioritize. Because at the end of the day, the activities are pretty clear. What tends to fail is prioritization. You're trying to do too many things at once, or you're doing the wrong priorities in the wrong order. And it's about having someone who's been there, done that, saying, that one you can really not worry about at the moment and come back to in 6 months, but this one you've got to nail. Okay. And I think that really helps in the allocation. So from both sides of the coin, being in the same room, being focused on the topic without distractions will create a lot more value than 10 Zoom calls, if you ask me.
Yeah, and I think there's different types of investors. I think that, in your case, you're a very hands-on investor, and particularly, you've operated a lot of businesses and you've invested in a lot of business. You've seen a lot of pattern recognition. Sometimes a check is just a check, and that's fine. You just need to know what you're getting into. If you're raising money from just a high net worth individual that they're going to wire you $100K and then, they're not going to be involved in the business, that's also okay. But if you have an opportunity, in our case, the way I looked at this, and this is a bit of retrospective rationalization on my side as a founder who brought on some really good investors early, I think there's like kind of 2 main buckets of angel investors early on. There's angel investors with deep sector knowledge and very deep experience in what you're building. And this is the case with you, given that you were, light years ahead in REA Group, and you'd been part of other stories. And so I was able to literally craft a roadmap of execution where you had incredible insight to that. And then the other bucket is probably if you're building a venture backable business that's, solving a really big problem that's going to require capital, you're probably going to need follow-on capital or stage financing. And then, finding an investor that can write an early check and then help you raise additional capital as you grow. Those are kind of the two buckets that I thought of at Viva Real. And now we've kind of institutionalized that advice to founders because, getting someone that can dig in with you in the early days, it's just going to save you a ton of time. Because how many times have you seen certain mistakes, where the founders end up just, not focusing on the right things or not talking to their customers and really, building a solution that addresses their needs. So, what advice do you find yourself giving founders? You mentioned prioritization. What do you think the biggest mistake that you see early stage founders, get kind of twisted up?
Okay, I'm going to put this into a couple of buckets. Probably going to be 3 buckets, knowing me. The first is lack of clarity. So let's put it in 2 buckets: operational bucket and a capital bucket. Now, within the operational bucket, I think that the areas that tend to go wrong are lack of clarity about what they're trying to do, and they have clarity on one day, and then the next day it can change. Right? Now, that's okay if you're learning things, but you've got to be very clear on what are the decision points and how that can impact your direction. The second thing is doing too much. So you've been successful and suddenly the product's going whooshka right out here and they've got 30 different products they want to offer people versus picking the one that's going, and what tends to happen is you have one product that's 80% of the revenue and 29 products that are 20% of the revenue, and you end up having to support all of them. What's important is to understand what's that 1 or 2 products that are delivering the complete value and then just executing against that and not getting distracted. The problem with entrepreneurs is that they are forever expansive in their thoughts because they are by definition entrepreneurs, right? They can see an opportunity. They see another opportunity and another opportunity. But true success comes from not getting distracted by the bright, shiny lights and being very focused on what you've got to do. And I'll give you a true story. Is the REA Group back when, so realestate.com.au was the market leading property portal in Australia. When I took it over, it had it was listed, but it was a baby listing. So it had a market cap of $8 million with about 4 million revenues and 6 million losses. And we had a whole bunch of products that we were trying to sell to the market, basically trying to get any revenue through the door. But there was one product that was delivering the majority of the value, which was a subscription, an advertising subscription. And one of the first things I did was I just cut away everything else. I said, well, if we just want to get this advertising subscription into 100% of Australian real estate offices and agents. And that's basically what we did for 4 years. And we went from, I think when I joined, it was about 12% market share. And when I left, it was about a 90-something% of the not market share, but 90% of the market used the product. And then once you're embedded and you've worked on building the brand, you can then start to extract value by bolting on the additional products, which we did progressively over time. And when I left, we had 155 million in revenues, I think, 135 million, 155, I can't remember what it was, a market cap of $1 billion and super profitable. Can't remember all the numbers now, because it was a long time ago. So that's why I think focus is really important. And which is about the distraction and clarity of direction. If you're focused in going in the wrong direction, well, that's equally as disastrous, right? And then on the capital side, and where I've seen things go wrong, is making sure you get the right investors on board. I mean, you can get people with money on board, but if they've got a short patience, or they want to flex their muscles, they can then start to exert control on your business in ways that are quite disastrous. And there's a company I'm involved in at the moment, luckily just as a shareholder, but it's a large one, where there's a large bank involved. And that bank is basically screwing the company so it can get control for basically a very small capital injection because the company needs money. but it has all these veto rights. So be very careful on the deals that you negotiate with people along the way, so you don't end up putting in places things that come back to bite you in the ass, so to speak. So they're the two sort of things where I think things go wrong. Is not clearly thinking through the execution side, and so the last thing on the execution, thinking about it, is getting the right people. And I think too often when you're a small business, if you've only got 10, 15, 20 employees, someone who's not pulling their weight is pretty clear. But for some reason, people always think the best, and they try to keep them on, and they're going to get better and whatnot. It's like, they say hire slow, fire fast. And I think that's very, very important when you've only got capacity to have X number of people in your business. So there's sort of some of the things that I think are areas where people get it wrong.
You're bringing me back to the early days of Viva with the don't chase the bright and shiny lights. There's a couple of mantras that I've, borrowed from you over the years. Vanilla, 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 one role, one focus. Don't chase the bright and shiny lights. These are all things that I want to dig into some of those. But, I think that in fact, probably one of the most common things people mention in my book about they liked is that they really like this concept of vanilla, vanilla, vanilla. So let's unpack that. And we'll illustrate some of this with my case of my company. When we came to the market, there was a handful of incumbents, right? There was, ImmovaWeb, there was Zap, there was a couple other ones, and all of them were better funded than we were and had been operating for a longer period of time, and they had, more market share. And probably one of the single most valuable things that we learned from you in those conversations, those whiteboard conversations, was simplify the product. Because when we looked at the market, when we first entered the market, there was this, listing package for those that aren't familiar with kind of property portals, where it's an extension of the classifieds business, where you can buy 50 properties or 100 properties or 200 properties, and then you have like the super featured property, and you have this kind of complex package. And I remember sitting in the conference room with you, and you said, we have to simplify. You said vanilla, 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 not vanilla, strawberry, chocolate. So you need one product so that it's super easy to understand. You have unlimited listings so that you get all the inventory, because that's going to drive content, which then is going to drive SEO and traffic. And what happened then, and I remember like almost specifically the results of this, we had a sales model that required salespeople out in the field and signing up brokers, real estate brokers. And we went from production from 4 or 5 new contracts a month to every sales rep selling 18 to 20 contracts, because there was not a lot of options. It was just one product, and the indecision of a customer is so important. Talk more about sales, the importance of simplicity. And, you talked about, covering that part of like making sure you have clarity, but let's dig a little deeper down in terms of clarity of product and sales.
So sales and product are things that go hand in hand. But first of all, always remember that as a founder or someone operating in any business, you will know more about your product and more about the features and functions of your product than any of your customers will ever know or ever really want to know. Okay? Most customers are buying a product to do some job. So in the classifieds business, they're buying a product so they get leads. If you're in a sales CRM business, and I've got a chairman of a company called the PropTech Group that's the market leader in Australia that does that, we keep forgetting that the customer just wants a place in which they can manage properties, manage their buyers, manage their sellers, and make the whole process work. All the bells and whistles are just bells and whistles that most people don't use. So simplicity of product is very important. Then when you have a sales team, if I give anyone two jobs to do or 2 products to sell, there's a lost time, right, where they're flipping between the 2. And sales guys are very good at saying, what's the easiest way for me to maximize my commission? That's their job, right? They just want to find the easiest way to maximize the commission. And the challenge is, if that's not 100% aligned to your overall mission as a business, then the sales guy is going to do exactly what they can to get the biggest check at the end of every month. And you may be annoyed that they haven't done exactly what you want. And the best way to think about that is just cut out the noise. Here's a product. Here's a very, if you can communicate it simply to them, they'll be able to communicate it simply to the target customer. Because the more complex it is, the harder it is. And there are people who just want to tell you about all the bells and the whistles and so on. And most people are going, I don't care. Does it do the basics? Like buying a car. The most important thing is it goes from A to B. It takes, uses so much gas in the process. But all the other bells and whistles and the electric things and all the gizmos, they're nice to have, but they're not essential. So focus on what's essential. Get your sales guys to understand it. Lose all the other crap around the outside and get them to sell it. Now, once you're embedded in a business, that's when you start to sell the bells and whistles, because then the bells and whistles that really work and add value, you can charge more for. But you've got to get embedded in the business first.
Yeah, it's I remember you referred to as depth products when we talked about at Viva Real, and I think that one challenge for founders is they try to skip to that too soon after they don't have like a dominant product, and then they lose focus.
It's a bright, shiny light. Okay,
you got it.
It's another bright, shiny light, right?
Keep the shades on and avoid the bright and shiny lights. You mentioned the CRM company that you're part of, and that triggers a memory also that I'll just share. I don't know if you remember this incident, but I remember one time I called your cell phone because I was panicked about our competitor that actually bought a CRM company. And this CRM company fed us a bunch of listings and data into Viva Real. And I was worried that they would turn off, the content, reducing, the experience, or, making the experience not as good for our property searchers. I don't know if you remember. You probably don't remember. These are things that I remember. Do you remember what you told me when I called you?
Probably said, "Don't panic." Knowing me, I would have said, "Don't panic." But at the end of the day, their customers are going to want to upload to you, and they're going to have to send their listings to you anyway. Yeah? I probably said something on those lines.
You actually said, "Can I go back to bed now?" Because I didn't realize that you were in Australia, and I called you at 3 a.m. The point was, when you said, "Can I go back to bed now?" It's like, this is not a big deal. A lot of times founders, in their minds, the problems that they have are bigger. I look at it from two perspectives. It's either things are never going as good as you think, and things are never as bad as you think. What is your role as an investor and, mentor, advisor, just to sometimes walk people off the ledge as founders because they can kind of get in their own way?
Yeah, I refer to it as, I have to help them reach for the sky while keeping their feet firmly planted on the ground. Okay, is the way to think about it. And so when I talk to in investments or companies, it doesn't matter the level, right? Everyone, and the fundamental issue always comes back to the same issues. They're eating and breathing this thing 24 hours a day. They don't realize that they're only getting 30 seconds a day of their customers' brain space. And so what they see as a big issue is probably a small issue, and probably the customer doesn't even know that it's an issue. So the conversations are always around, look, is this earth shattering? Doesn't really matter. Oh, you had an outage for 30 minutes. So, right? Does it really matter? Has anything actually changed? Because you got a few phone calls from disgruntled customers, but that was about it. Why is it not working? You say, well, it's probably, probably a technology issue. We'll be fixed. Don't worry. And it's all about keeping it very calm. But at the same time, I also see companies that don't stretch themselves. Okay, so they're on a good thing. They're actually doing really well, but then they don't double down on actually what they're doing well. And I always remember back in when I was CEO of the REA Group, and this was back in 2003, maybe 2002. Okay, so it's 20 years ago. So it's a little bit of cobwebs there. But I remember having a conversation with one of the directors, and we'd cracked the code, we'd focused the team, and he came to me and said, "Do you have enough sales guys?" I said, "What do you mean?" Well, he said, and he was basically forcing me to reach for the stars. He said, "You've cracked the code on how to sell this product. You've got a good marketing team that's working hand in hand with the sales team. you're generating X number of sales per person, 16 or whatever the number was, double the size of your sales team. And I said, yeah, but we're not going to be able to raise any more money and so on. He said, no, you've cracked the code. Now accelerate. And that was the boot up the backside to get me to realize that if you are doing something right, double down, triple down on it so that you can get that momentum, because momentum goes in both directions. And the way you think about it is, as you're traveling along, I'll do this right. The more you can move to a higher level, the faster. It's a compounding effect. So if you've got momentum, double down, triple down on what you're doing well. Okay. When things are going in the wrong direction, take your foot off the accelerator. Don't keep pushing if it ain't going right, because all you're doing is moving yourself to a lower operating level. Take a step back, identify what's going wrong, then try to recorrect the course. But when things are going well, move the margin. If you can grow, instead of growing 100% this year, you can grow 120% this year. Well, then doubling it for the next year is the difference between 200 and 240%. Okay. And now it's getting bigger and bigger. So that's why understanding these things and having someone who is not buried 24/7 in your business, just look at it cold-heartedly before saying, I'm going back to bed, right, will helpfully give you the impetus to, A, don't overplay the big issues or the little issues, and secondly, push yourself in the right direction.
Yeah, I was thinking as I hear you speak, and I think there's an interesting role that a mentor, an advisor can play. I think that if I think back to the relationship that we built over the years, you always gave really spot on advice. You weren't always emphatic about me doing exactly what you said, even though I usually listened to you, and I usually, if it was a 10-degree adjustment, it was very minor. And at the same time, that I remember a little bit of tough love sometimes. Like, hey, I remember at one point we had a lunch and I didn't have our numbers clear, And so what do you think the role of you as an investor in really just also pushing sometimes, and, not pushing to a breaking point, because you that's not productive for anyone if the founder is just beat up so much. But, it reminds me, I just got back from the gym, and I go there because I like when the trainers kind of yell at me a little bit, not in a mean way, but hey, get it going. How much of that you think is important for founders, and probably maybe a little bit more relevant once you found product market fit? Because I think it's probably counterproductive if you haven't nailed it yet. But once you've nailed it and you've got that momentum, putting that foot on the accelerator, sometimes you don't know what you're capable of until someone says, hey, shoot for the stars and maybe you hit the moon.
Absolutely. I think the biggest issue you get is if you're a founder of a business and you've got 20 employees, it's unlikely that the 19 employees are going to be 100% honest when things aren't going right. Okay? They'll give you some ideas the way things should be done, but if you push back and say, no, we're doing it this way, they'll probably fall into line. Okay? Because they're probably fearful they might be a little bit fearful of their position or their stocks or whatever, right? Who knows, right? People, or they're just not massively emotionally invested. Now, if you've got co-founders, you might have that, but then there's usually a relationship, a friendship, which people sometimes don't want to push too hard on. I think if you've got a good board or advisory board who are A, not in your pocket 24/7, and B, have the ability. My dog is barking. Sorry about that. And B, have the ability to tell you what they think is important. Now, if they're a financial investor, that's sometimes they don't have that capacity because they're just more about the numbers and what's happening. And well, you said you're going to do 10 million, you've done 8. We've been in this for 2 years. You got to hit your numbers, right? Because they're sort of, you're one of probably 30, 40 investments they've got. What I think is important is to have someone there who can really, you can have a conversation with, be open to them about what's working, what's not working, and who can tell you that that's bullshit, right? And sorry, that's not right. That's not what's really happening. And what's interesting is and I've got this a good enough relationship with, for example, the CEO of the proptech group, and I've known Joe for a long time, and we have a very good understanding both ways, me as chairman and him as CEO, that if things aren't going right, we'll have the brutal conversation. And it can be about individuals, or it can be around direction of the company. It can be around a deal that's being negotiated. It can be around even interactions with the board, presentations. If you can get to that level, you will absolutely succeed. Now, that only works is because Joe and I have got an agreement that we can basically tell each other to piss off if we don't agree something. And it's not personal. It's just being direct to the point. And we will listen to each other. Okay? We won't be about bruised egos and I'm the founder and I know what I'm doing and you're only a board member and you look at this for 3 hours a month and whatever, and you may not know. We have this very different dynamic, but it's taken a while to get there. And that I would encourage founders or CEOs to find a real mentor, someone who's has an emotional investment in the outcome, but in the benefit of the individual as well as the business, and who has the experience that they can then call bullshit on something. There's some, I spend a lot of time with Ronnie, who runs Alcubo, and we can have these brutal conversations. And the other thing that's always very important with the founder is to reach out to the mentor. Okay. So I've offered with every company I invest in, I say, look, I'll help you. Just tell me how you want. Half you never hear from, right? Unless they want to do a capital raise. And hey, here's the tin. Can you please put your cash in the tin? Thank you very much. Or you'll get diluted. Okay. That's not a relationship. That's just an investment. But when there are others where they are literally on WhatsApp the whole time and say, Simon, can we do a call? I got this issue. I got this opportunity. I'm doing this capital raise. How should I phrase this? Can you help pitch this to someone? So they see it as an extension of the team, but around critical issues, and they embrace the advice. And you're absolutely spot on. Doesn't mean you're going to take the advice. It's just going to be an opinion. That opinion can challenge what you're currently doing, or it can back it up and say, that's good. You're on the right direction. Accelerate. But you've got to be open to the criticism. And I think too many people are very defensive around that, or they don't even want to reach out because they don't necessarily want to have the negative comments back.
Yeah, I mean, I guess that the ego is important to be able to put that aside and know that it's for the benefit of the progress of the company. I guess I'm going to ask a different question. How do you handle those useless people that actually could be harmful in your business as an investor, where they don't have the insight to the company and they're giving unsolicited advice on things that is very detached? What would you advise a founder? Because that tends to happen is the company gets bigger, your board gets bigger, you end up a couple capital raisings, and you have someone on the board that is a strictly finance person, and nothing wrong with a finance person. But if you've never built a company before, and then you're trying to figure out how to, launch a new product, and your opinion is just worthless. And some people have a big ego and they want to feel like they're pounding their fist at the table. What advice do you have as a founder to kind of neutralize that so that doesn't become, a tax on you?
Patience is always good. Okay. Because if they're sitting on a big chunk of money that you may need to access in the future, don't piss them off. Right. Pissing people off is a one-way ticket, right? Because they just get angry and they don't think you're not listening, whatever. I think though, then the question is, how do you listen to someone, but do it in a way that doesn't chew up days, weeks, months? And that's an art form as much as anything else. You listen, you engage them, you probably turn back some of the things they're talking about into questions for them. So how would you do this? How would you do that, etc.? Can you show me other companies that you've worked with, etc., so I can talk to them as well to get the experience? And that's where they may rapidly work out they don't actually have the knowledge to really pass on to you. And then the other thing I always do is I try to have every meeting no longer than 30 minutes. Okay, so clearly a board meeting can't be 30 minutes, but we do. So for the proptech group, we do a monthly board meeting that's basically 90 minutes to go through a listed company's business. Okay. Now, in that 90 minutes, it forces you to prioritize the key issues to talk about. So setting limits to time is probably the best thing, because time's the one thing you're not going to be, you just can't create, right? It's finite. There's 24 hours a day. You got to sleep. You got to do this, that. You got so half-hour meetings. By the way, I'd encourage people to do this internally. Half-hour meetings. Number of times people come in, don't have, people have this open door policy. You can come in and ask questions. No, let's there'll be a time every day where I'm open for people coming in because I'm doing emails or whatever, or giving me a call. I would use WhatsApp chat groups that allow responding on your time zone, your time limits, not time zone, time limits. And then if I'm going to do a phone call, and I'm looking at my diary today, right? I had a half-hour call, this one, okay? And then I got another half-hour call later on. And I say, guys, I start the meeting by saying, I got 30 minutes maximum. Okay. Now, what's the issue? Let's get on with it. And I try to focus in on what's happening. So the other way of managing these sort of characters who love to provide you with a lot of advice and guidance is to limit the time and get them to get to the point. And then it's very important that they feel like they're being heard, because they're on your board or they're an investor, all of which should be treated the same way. And is to then respond back to them. I take this on board, summarize what the key points are, and then respond. Then I'll respond back saying, yep, I get your point on these. I'm going to look at these two in more detail. The other ones I think are less priority for the business at the moment. And these ones you just don't talk about, right? They tend to get forgotten over a while. And that's how best to do it in a very politically astute manner.
Yeah, I think it makes sense. I mean, there's no sense in just blowing someone off just because they are digging in too much or giving advice that you don't think is relevant. It is really important to maintain those relationships, especially if you've got a shareholder or an investor. There's no sense in making it complicated. I want to ask a question that now maybe for someone else, or maybe for me, or for a friend, or maybe it's me. One role, one focus. I remember this at Viva, and I'm kind of struggling with it right now. And we can maybe take this offline, because we're doing a lot of stuff at Latitude. We have an education business. We have a product that we're building for tech companies. We're reducing friction for founders. We have a fund. So we are doing a lot of things, and I'm going against a little bit of your, vanilla advice by having a little bit more complexity. However, all of these things are they are well reciprocated, because they basically have network effects. When the education business helps us, get distribution for our products, helps source opportunities for the fund. But what I'm finding right now is that I want to inch towards one role, one focus, where, because we're testing a lot of new things to see what sticks. We decided to launch an event, which, similar to the events that you've been hosting over the years, and Conecte Mobi, which, we kind of conceptualized together, and it was a huge brand building exercise. We're replicating a lot of some of these strategies that we had at Viva Real. But as I have new initiatives, I worry that there's not clear ownership over things. So how can I, as a CEO, start to inch towards, making sure people are focused on things so we can have accountability in the organization, but not creating a culture where people are like, oh, I'm sorry, I can't help with that because one role, one focus, and I'm not going to, help you close this deal, even though you would be really helpful in getting it across the finish line. So what's your advice for me to transition into more of a focused thing? And you can't say cut out everything and only do one thing, because I think that it's not, that ship has sailed and it's not quite relevant for the business that I'm building.
Yep. So the concept of one role, one focus is very much around any individual in a job or in a role is focused really on just one clearly trackable set of KPIs. So you want to launch a conferencing business for startups in Latin America. Okay, cool, makes sense. Well, have someone who's doing that, and that's all they do 24/7. They wake up, they think about the conferencing business. They think about, we're doing something, September 1 and something January 5th or whatever it is, and they're the dates and the land, and then here are the KPIs, and that's all they do. Clearly, as you go up the totem pole, you can't have just one role, one focus, because you are by definition a CEO of a business that has multiple elements to it. The most important thing is you'll have, the thing about it is 3 horizons. There's the core business, the one that's making your money today and will continue to make your money, and that's got to grow, and you have someone running that. You have your emerging businesses, those that have been tested, make sense, are growing, but are not fully into your core business. And you have those who are dreams, the experimentations. Now, what happens is too often those experimentations find their way into the middle bucket when they shouldn't. Because the thoughts like the conferencing business sounds like great, all these wonderful things, blah, 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 blah. And then if you look at it really carefully, you might say, but at the end of the day, it's not going to add any value, right? We will still get to the same outcome with our core business and the education and a few other things. Let's not do that. But it's exciting and it's glitzy and it's glamorous and it's a bright, shiny light. It's back to that. Okay. So it's all about being very clear on what's core and you're not giving up on and needs to be continually grown. So in property portal world, that's your subscription business dealing with agents every day. Then you have your emerging businesses. Well, that can be a mortgaging business, right? And other things. Right? So that makes sense. And then you have your bright, shiny lights, which means, I'm going to build a CRM. I'm going to do this because I want to get onto the desktop. I want to do a whole range of things. Some of them you don't need to do. It's just understanding where they flow. So in managing that hierarchy, the individuals in the team should have one role, one focus. As the CEO, your job is to be forever prioritizing, working out where to draw that line, and being ruthless with yourself on getting rid of the stuff below the line. Okay? And you will walk away from opportunity, but you're just walking away from number 6 priority.
Yeah. Yeah, we've definitely cut out some things that we had on our roadmap that we just said, this is, too much of a distraction. But I guess I'm going to challenge one premise, because if you are launching it, like let's use the events business, which is actually really relevant to us, and we launched it, and we've already sold a bunch of sponsorship. It looks like it's going to be, which a quick plug here. So Vamos Latam Summit, you can go check it out on our website, Latitud/VLS. But that event, we have someone responsible for leading it. But given that it's kind of an MVP and we just, we launched it and, it's turned out to be a huge success because we've sold a ton of tickets, attracted great sponsors. But there's a bunch of things that need to happen. And one individual is unable to manage everything across the spectrum. So currently we're pulling in a few people that have other jobs because there's no way to get anything off the ground with just one person. Is that okay? And can you do that temporarily as long as you have a timeline? And because you have to, otherwise you won't test and innovate in any new things because you can't just start and build things from scratch with one person.
Yeah, I think I first of all, in many of the businesses I'm involved in, I encourage them to A, have someone running it, B, use temporary staff, contract staff, to really to do it in such a way. If you believe in it so much and it's starting to look really successful, get the contractors in to do it. You'll find intelligent contractors out there who get it and can run fast. I mean, you're not doing something that's so unique and needs some a PhD in data science and takes 10 years. No, you're talking about running a conference, right? So getting some people who can work for you on a contract basis, because when you start pulling people from the other parts of the business, either A, the other parts of the business slow down, and if they doesn't slow down, what were they doing anyway, right? You just got a cost saving. across your business. So I think, being very very clear in how you approach those things. So when we run conferences, and blatant plug too, right, is the Property Portal Watch conference. So if you're a online real estate marketplace operating anywhere in the world, it's www.ppwmadrid22.com. Okay, there's a plug, but you'll learn a lot about those online marketplaces. So if we're doing that conference, we'll pull in temps and contractors to help us get across the line. But I have one or two core people who are there for all the conferences. So the knowledge contained is continuous, and we just staff up, staff down. I think the use of temporary staff is really important in businesses nowadays, just as it is from work from home type structures. Be prepared to embrace new ways of doing business.
Yeah, I like it. I think it makes sense. And by the way, the Property Portal Watches, I've done tons of business because of those events. So it's, I was at the first ones, and it's been a little while since I've been. So we got to bring it back, and I'll hopefully be able to come to some future ones. Simon, we're over time here, but really, really enjoyed the conversation. It's, one thing I like about your involvement is you're just very tactical, which a lot of investors are very kind of sit back and like have this like broad view of things. But I like how you go deep on things, and you give really kind of like, poignant, specific advice. We'll find some time to carve off. I need to give you an update on how things are going in general. Thanks for being an early LP also in the fund, and being an early supporter. And yeah, thanks a lot for, for all of your support over the years. Have really appreciated the friendship that we built, and have greatly benefited from your experience and the mistakes you've made in your career, that you were able to pass on to me so that I could avoid them, and just overall the insights that you brought to me.
Okay, well, thank you. No, it's been a pleasure, knowing you and being involved in Viva Real going back to whatever 2008 or whatever it is, 9. I can't remember the dates now. And the thing that's been very interesting, and just to do a plug in your direction, is when I talk to people about examples of persistence, I trot out your 30-odd asking for money back in the very early days. Because I'm forever talking to people who go, yeah, but I'm having problems raising money. I go, well, you should talk to Brian, right? He when he was trying to get money, and it's 31, 32 different people, you went and banged on the door and really pitched your business to have them slam it in your face fundamentally. And it's that persistence that eventually paid off into being a very good outcome with Viva Real merging with Zap, then being bought by OLX, which is a great story. I'm still waiting for the last check, just for clarity's sake, right?
Don't worry, it's on its way.
It's on its way, not from you, but from them. But I also think that has then really positioned you so well to then start building Latitude and all the other ventures that you're doing, all of which is super exciting. But I think the lesson that you can give to everyone is persistence pays off. Okay. Because not everyone's going to get your business straight up. They're not going to be your friend in the first 30 seconds. But if you're clear with what you want, clear to why it works, and clear in your persistence in asking people and talking to them about it, it'll eventually pay off. So yeah, so congratulations to you.
Well, I still remember, and we're going over on time a little bit, but I still remember it was June 2011. I had $87 in the bank, and you wired $300K. Before we had to make payroll, I hadn't paid myself a salary, obviously, in 6 months, and the money hit the account. I think it was a week before we had payroll, and this is in 2011. You had already been an investor. You'd already put a little bit of money. I think you put $100K in, but then you wired $300K, and that kind of at that point it kind of it got us over the edge, because that was a tough time. I couldn't raise any money. And then once you came in, the momentum happened. Waldorf was right there. He cut a check, and then we brought on a bunch of other investors soon after with Monashis and Kazakh. So I think that the word angel investor, you weren't really an angel investor then, because that wasn't really a term that was used as much, but you ended up becoming an angel at that moment when you kind of saved the day with that wire. And so I'll always remember that. And the great thing about it is the story could have stopped there, but then you continue to deliver value through your advice. And I think that's a pretty rare thing to find as an entrepreneur in the early days. And if anyone can seek out someone that, is able to dig in with them and help them, they will greatly benefit from that.
And honestly, anyone who's in a relevant type business wants to reach out to me, please do. Very happy to have a chat. My just one last point. My absolute belief is that having been in this industry for basically 25 years, you got to give back, right? You give back because you want to help people build the best they possibly can in these disruptive type businesses. So that's why I spend the time and chat with people. So thank you for the opportunity to chat today, Brian.
Thank you, man.